Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 29th of January, Bull versus Bear webinar. Steve Miley here on the call for trade day. Today is Fed Day. There it says right on the top of the screen here. So, Fed Day today. Remember, please, no trading 2 minutes before or after the Fed meeting. Fed announcement is coming at 1 o'clock Central Time, 2 o'clock Eastern Time today. 1 o'clock Central Time. 2 o'clock Eastern Time, please be aware it is the Fed today. No trading or orders in the order books 2 minutes before or after those times. That's going to be the main focus going into the early part of today. However, there is other stuff going on. We've had some consumer data in here out of Germany this morning, slight miss on that, slight worse than expected. We do get the Bank of Canada ahead of. So Bank of Canada and here, monetary policy report statement and interest rate decision at 9:45 Eastern today, 9:45 Eastern, and then 10 o'clock we get the Fed. So maybe keeping a little eye on the Bank of Canada as well. And then we'll talk about the earnings reports as well. So in the Fed, obviously, no changes expected. Look at some articles in a second, but no change expected. Pretty much absolutely nailed on that we're going to get no change in here. Easiest call we've had for many years. But obviously all focus really on the press conference and the statement. Statement probably less important. Press conference could be super important. Is Powell going to get questions about Trump? Is he going to get questions about the potential inflationary pressures that are coming down the line from the Trump policies? So let's take a look at that and we'll dissect through that tomorrow. Actually, Duncan will be with you tomorrow to take a look at that. But the Fed statement and press conference is going to be far more important. Remember the statement at 2 o'clock. That's when you're embargoed, no trading 2 o'clock. The interest rate decision and statement. The 30 minutes later, 2:30 Eastern, we get the press conference. So that's probably going to be more interesting than the actual interest rate decision and statement itself. We've got an important day for earnings as well. Microsoft, Meta, and Tesla all coming up after the bell. So after the equity cash market closes, we have Microsoft, Meta, and Tesla. Obviously, big tech in here. Microsoft, Meta particularly going to be watched out for how they're doing in here, but Tesla also. And then already today we've had some good news. ASML in here have reported earnings, strong earnings numbers and revenue numbers in here for ASML. ASML, a competitor of NVIDIA, so doing well. They got significantly hit back on Monday after the DeepSeek driven sell-off that we saw to tech stocks and chip stocks and AI stocks. So ASML did get hit, a strong rebound. This European stocks, a strong rebound already in here this morning. So we've seen ASML notably higher, and I've got a little article in here. ASML surges the most since 2020 as AI investments fuel orders. So most since 2020. So a strong day. Dutch company reported bookings of $7.4 billion in the fourth quarter, better than expected, basically. And then, as we said, we've got extra data to come through in here. So all positive on that front in here. ASML shares in Europe in here, in Amsterdam, trading up 12% in here this morning. So a significant move higher. That was after the big drop we saw on Monday. And again in here, we see chip stock set to extend recovery after DeepSeek reckoning. ASML helping that in Europe in here. So looking to the upside, we have a further recovery yesterday. We've been speaking about that pretty much since Monday, since pre-market. We were way down. I've been talking about it rebounding. It's rebounded on Monday. A strong rebound yesterday. Obviously, ASML helping matters, and it's going to be really interesting with what we get. I think really the tech data, the earnings data we're going to get this evening out of Microsoft and Meta really over Tesla, but Tesla are important as well for the broader market, but particularly on the tech side, on the AI side, on the chips. Well, not so much the chip side, but Microsoft and Meta, we're certainly going to be keeping an eye on those for any kind of forward guidance. That's going to be super important to be watching out for. So I think they're going to be maybe more important than the Fed today in potential market movements after the close. In here, if we go to the from Bloomberg's morning briefing, America's in here, focusing here on Microsoft and OpenAI investigating whether data output from OpenAI's technology was found in an unauthorized manner by a group linked to DeepSeek. So basically finger pointing going on from Microsoft and OpenAI in here regarding DeepSeek. So it's going to be interesting to see how that one plays out going forward. So essentially, we said in here, ASML has beat estimates. We've already looked at that. Nasdaq's futures pointed to further recovery in here going into today. Markets looking positive on that rebound, helped higher as well by ASML. And so all fairly positive. Most of what we've got coming through in here on the headlines, fairly positive again going into today. Nasdaq futures rise as tech rebounds ahead of Fed. Traders watch tech earnings due later for sign of resilience. We've spoken about that. Fed expected to pull, the traders hoping for a March cut. Well, the market's not really pricing that in. It's probably more likely to be out to May before we get the first rate cut. Potential chance in March, but we're going to know a lot more, well, some more, not maybe a lot more, but we're going to see a little more and have a little bit more of an idea as we go into the earnings this evening. That's going to be important, I think. Fed chases most predictable, no change in years. Gundlach says so. Federal Reserve's upcoming rates is the most predictable, no change in recent years, according to Double Line Capital's Jeffrey Gundlach. So while the Fed is over, we expect to hold rates steady. Traders have been key bullish bets on US Treasuries amid hopes. So Feds have gone big. We've spoken about Fed looking bullish in here. Bonds looking bullish. In the reports, we'll come to those shortly. The reports of the bond markets are looking bullish in price, pointing to lower yields, and obviously that's supportive of stocks. So we are seeing a bullish positioning in here as well in the markets going into the Fed on bonds, looking for bullish on price. That's lower yields. Fed holds rates steady and brace for Trump. Powell likely to face questions, and we spoke about this already, of Trump's policies and comments. So policy ways to make more clarity and path. So I think it will come more from the, as I say, from the Q&A, from the press conference, as opposed to in the statement. Obviously, really expecting no change whatsoever. Let's get a little bit ahead to tomorrow. And Duncan will probably take a look at this as well, though. Traders bet ECB will need to deepen the seller rate cut. So even though we're looking for the Fed to be more measured, maybe only 2 rate cuts this year, we are looking for the ECB to be more aggressive. May deliver half-point cut by mid-year. So half-point potentially by mid-year. And the market's very much expecting at tomorrow's ECB meeting for a quarter-point cut, widely expected on Thursday as traders will be watching for any shift. So also looking at the press conference there, Duncan will take a look at that going into tomorrow. European stocks actually helped by ASML hit an all-time high. So S&P is not far off the all-time high that was posted just last week. Despite the sell-off that we saw on Monday, the strong rebound intraday on Monday after the open, then again yesterday, has nearly closed the gap that we had from Monday, and the market now hovering not far from the all-time high. But European stock indices hitting all-time highs in here this morning. So, and the broader market in here looking positive going into today. And if we take a look, we have in here we were 1% up on the Nikkei on the overnight, and then we saw European markets this morning doing well. 0.3 up on the UK FTSE, German DAX up nearly 0.8. Actually, French CAC slightly lower, 0.2 down. And if we look at the futures in here this morning, we're up 0.4 already on the Nasdaq. S&P sitting pretty much unchanged there, but the Nasdaq pushing higher. No really need to look at this. We've been looking at this, the CME Fed Watch tool, pretty much 0 chance in here, 0.5% chance of a rate cut, but pretty much not pricing in any chance of a rate cut in here. If we go to March, though, what we do see is now this is unchanged. So there's a 70% chance that we're still unchanged in March. It's only very much an outside. This is the one we're going to really be watching, going when we either Duncan will take a look or I'll take a look on Friday. How this shifts after the statement and press conference today. And checking out when we'll come to that shortly as well on the bond markets, how they reacted. The bond markets react bullish, so up in price, down in yield. It's going to be positive for stocks, and then indicate that potentially the market's looking for a softer, a more dovish tone from the Fed. If we do look at the bond markets in here, we have seen in here breaks above important levels. So we did get it just above here. We got above it in here. We just got to 114.25 here on the 30-year, just above this 114.23 level. We're backed off slightly lower. 10-year in here did get significantly above this 119.06 and broke the trend line. So we've had bullish signals. We have just moved slightly back lower in here yesterday in price, higher in yields, but actually reversing that this morning. We'll see that when we come to the yield chart shortly. And the 2-year in here has pushed significantly higher prices, lower yields in here. So 2-year, remember, more responsive in here to the central bank. The longer end, 10 years, 30 year, more responsive to outlook on the economy. And if we take a look at the on the equity markets, obviously strong rebound, getting up towards the gap in here on the S&P, not quite as close on the Nasdaq, but those are definitely in focus going into the day through the Fed. So post Fed, we could easily have a go pushing if we get a move to higher prices on bonds. Higher prices on bonds, lower yields, that could really help stock indices go and close these gaps in here. And if we go and take a look at here on the 10-year note and the yield, you can see we've got this area, these two yield loads in here. So 451 and 440, 48 and a half, 49 in here. We got very close to that in here on Monday. We did have a slight recoil higher in yields, but now moving back to lower yields. If we can push down through this area here, 450 to 449, I think we could see a significant move. This is the 10-year yield. This is what I'd be watching in here. If we can get back through this area here, these levels here, and so on the 10-year in here, what we'll be looking at is back above the highs in here, back above this level in here, this 106.18.2, and back above the highs that we posted on Monday. If we can get up through there on the 10-year, so excuse me, wrong, 10-year note, get back above this 109.06 level in here, and Friday's high was up at where did we get to? 109.12. So back above 109.12 in here, back above Monday's peak. We can get back above there on the 10-year, and then that's going to push us on the yields. In yield terms, it's going to push us down through this little low here, a 451 low, 448.5, 449 low yield. That would signal a more positive tone for stock indices. And then finally in here, we can take a look at the chart. So you can see we were looking yesterday, if I start on the ES on the 30-minute, we're looking at these. We were hovering below these retracement level. We got up through there. We're going into the gap, and the market now looking to close that gap. So that's going to be important to see if it closes out. If it closes the gap, there's no reason we can't go back up to the recent highs. And then bigger picture for the ES, we're not quite at the all-time highs yet. We didn't quite make those last week. On the future, we did make it as a high close on the cash. Okay, but the future not quite making that. So I think we could easily be closing the gap and up to last week's peaks in Friday's peak, and then potentially even up to here in the aftermarket when we get the earnings reports. So that's on the ES, looking very positive. On the Nasdaq, we're not quite at the gap yet. Not quite going into that. I think we can have a go at the gap today, though. I wouldn't be surprised. Obviously, up again in here this morning. I think we can have a go at the gap in here today, and then basically up to last week's peaks. So easily going up. So the gap in here, I think I've got it in here. So in here, there's the gap, 22.098, 21.01. To kind of try and push up into that gap. And if you can take out the gap, then I think we could easily be back up to 22.098 up in here through that peak in there. And still high. So upside is still the real is what we're looking at in here. Still looking for further gains going into today. Obviously, it's going to be key. It's going to be. I don't think it's so much the decision and the statement. I think it's going to be more in the press conference, and then after the closing bell in the latter market. In the once we reopen after the close on the futures, we're going to be looking at the reaction to the earnings reports. We're going to get in here from Tesla, Meta, and Microsoft. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you with another Bull versus Bear webinar tomorrow. Actually, no, it won't be me. It'll be Duncan in tomorrow. So Duncan back with you tomorrow. I'll speak to you on Friday. Take care. Bye.